Welcome back to the Deep Dive. Today we're cutting right through the noise of earnings season, straight to the core of a really complex report.
We're plunging into the Q3 2025 results for SOBI, that's Swedish Orphan Biovitrum.
A major player in rare disease therapeutics and hematology. And this one really needs a deep dive.
It does, because their earnings call on October 20th, it really presented this fascinating split narrative. On one hand, you have incredible operational reality.
Right.
Demand for their treatments is rock solid. But on the other hand, they're a global company. So you have macro currency movements, FX, which was a huge tailwind, and that really muddies the reported numbers.
Okay, so that's the core tension we need to unpack. Our goal here is to help you understand this paradox, how a company can deliver just an outstanding operational performance, raise its guidance, and yet still post a massive loss on paper and see its stock drop.
Exactly. We're going to break down the headline noise, that big impairment charge, and the pipeline that's giving management all this new confidence.
So let's start with the top line numbers. The execution seems, pretty exceptional.
It was. Revenue came in at SEK 7,776 million. That's a slight beat, which is good, but the headline growth, that's not the real story.
You're talking about the CER growth.
I'm talking about the CER, the constant exchange rate growth. It soared a massive 21% year over year. That tells you the underlying business is accelerating and accelerating fast, no matter what currencies are doing.
21% is. That's serious momentum for a company this size.
Yeah.
But there's another number that I think really defines the quarter, the adjusted EBITDA.
Absolutely. Adjusted EBITDA, that's your core operating profitability. It hit SEK 3,672 million, and you have to look at the margin that generates. An incredible 47.2% margin.
That just crushed what the street was expecting.
Crushed it. It was almost a 15% operational beat. And that strength, it flows right down to the adjusted EPS. SEK 6.05, that's up around 40% from last year.
So you have this huge operational beat, phenomenal margins, and then the headline number, the GAAP earnings per share, a jarring loss of negative 8.32 SEK.
That's the paradox. And the market reacted exactly how you'd expect, to the anxiety, not the performance.
It did. Despite the fantastic core business and the guidance raise, the shares closed down almost 2% on the day.
And with high volume, too.
Good.
That tells you people were actively, maybe emotionally selling. The market just could not square that near 50% margin with the scary headline from the write-down.
Okay, let's spend a minute on that margin, because 47% adjusted EBITDA isn't just good. It suggests a real fundamental shift in how they run the business.
It's all about financial discipline. It was overwhelmingly disciplined cost control and just great operational leverage. We saw OPEX, their operating expenses, fall from 38% of sales all the way down to 33%.
And drilling down into that.
Well, R&D expenses declined 6% at constant rates, partly because some programs were concluding, sure, but it also reflects savings from that restructuring they did back in Q2.
And the fact that their SG&A selling, general, and admin costs stayed flat is, to me, remarkable. They're paying for a huge launch with Altuvoct. They're ramping up pre-launch for NASP.
And they're absorbing it all without letting costs run away. That is pure execution.
And this discipline, it makes the balance sheet look great.
It really does. Operating cash flow is solid, SEK 1.84 billion. And even more importantly, they're keeping their net debt to EBITDA ratio at just 1.1x. For anyone listening, a ratio that low means the company is incredibly healthy. It has a lot of dry powder for the future.
Which brings us to the elephant in the room, the noise. That SEK 6.612 billion non-cash impairment charge on their product, Vonjo.
That's the number. That's the reason for the GAAP loss. It's a massive figure. You can't just ignore it, even if it's non-cash.
So what was the rationale?
It's complex. Vonjo's demand was actually solid, up 9% year over year. The problem was unfavorable gross to net adjustments, and its label is just too narrow compared to the competition. Management called it deferred uptake.
Deferred uptake. That sounds like polite corporate speak for commercial failure. I mean, SEK 6.6 billion is a huge write-down. How do we know this isn't a strategic blunder?
It's a fair question, and it's what the market was wrestling with. But I think the data backs up their narrative of portfolio pruning. It's a non-cash charge. It clears the decks. For a long-term investor, this lets management refocus capital and marketing on the products that are actually accelerating. It signals they're being responsible, even if it causes some short-term pain.
Okay, so let's pivot from the financials to that core business execution. Where are the massive margins actually coming from? You have these strategic products up 39% at CER.
Right, and they're now almost 2/3 of total sales. The growth engines are just roaring. Hematology surged 26% at CER. Immunology grew 12%.
And the star of the show seems to be Doptelet.
Absolutely. It's their largest product. It delivered spectacular 46% growth. And this success is tied directly to its profile in OTP. It's not just that it's effective, it's that it has fewer dietary restrictions for patients.
That's a huge quality of life factor.
It's massive. That's how you win market share in rare diseases. It's not always just about the clinical data.
I saw Gamifant's numbers too. That product nearly doubled.
Up 98% year over year. Just exceptional. That was boosted by the U.S. launch for MAS, macrophage activation syndrome, and Still's disease. It's the first ever approved treatment for that, so it's a huge validation of their expertise in immune dysregulation.
Then in hemophilia, which is their core franchise, Altuvoct is driving big growth.
It is. It contributed to SEK 1.6 billion in sales. That's 31% growth. And it's sustainable growth because it's mostly coming from patients switching off older products like Elocta. That momentum is just going to keep building with launches coming in Italy and France.
And we can't forget the Beyfortus royalties. That's a big piece of the puzzle, SEK 1.16 billion this quarter.
Right, and management's commentary here was interesting. They see huge prescriber confidence, something like a 90% preference share, but they were also honest that the RSV season got off to a slow start. The CDC data showed immunization rates between 40 and 57%.
Which creates inventory uncertainty in the short term.
Exactly. But for context, that royalty stream is tiered. It started at 25%, but as sales ramp up, that rate steps up. It could blend into the low 30s range over time. That's just more future financial leverage.
Okay, so connecting this powerful operational story to the future, the pipeline. This seems to be why management felt they could raise guidance despite that huge impairment.
This is where the story shifts. We have two near-term assets that are just massive catalysts. First, let's talk about NASP for uncontrolled gout.
It's getting close to the finish line, regulatorily speaking.
It is. The FDA accepted the application, the BLA filing. That locks in a PDUFA date, the decision deadline for June 2026. And the data is durable. Long-term studies show it works and keeps working. SOBI is already accelerating pre-launch activities using those savings from the Q2 restructuring.
And the second catalyst is olezarsen. The data from phase 3 seems, well, striking.
It's incredible. Olezarsen showed a 72% reduction in triglycerides, which is great. But the clinical home run was the 85% reduction in acute pancreatitis events.
85%.
An 85% reduction in a life-threatening event. I mean, that positions this as a potential game changer in the metabolic space. A potential blockbuster.
So what's the commercial potential looking like?
Huge. Management estimates peak sales could exceed SEK 5 billion in the EU5 alone, just for the MCS indication. The total patient population in Europe is estimated at 4 million, so the runway is massive. They're planning to submit to the EMA in 2026.
So with all this investment in the future, what happens to Vonjo? The product that took the SEK 6.6 billion hit, is it just being abandoned?
Far from it, actually. Management still expects it to be a long-term growth driver, but the strategy has totally changed. They're accelerating enrollment in the confirmatory Pacifica study. Enrollment was 50% faster in Q3.
But more than that, they're trying to broaden the label, right?
Exactly. Pivoting to explore new indications, specifically VEXAS and CML, which are, these are highly complex, rare hematologic diseases. They're expecting interim data for VEXAS in the first half of 2026. The goal is to get a totality of data, including real-world evidence, to argue for a much broader label.
And there was one more pipeline update. Gamifant sepsis.
Yes, the Phase 2A EMBRACE data is due with the Q4 report. This is for interferon gamma-driven sepsis. This is a patient group with a really dire outcome, a 40% mortality rate in the ICU. So if this works, the patient impact and the commercial impact would be enormous.
All of this, the execution, the pipeline, it clearly gave them the confidence to raise their full-year guidance.
They did. FY 2025 revenue growth is now guided to low double-digit % at CER, up from high single-digit. And the adjusted EBITDA margin was upgraded to mid to high 30s.
But listeners should know that 47% margin from Q3 probably won't hold. Operating expenses are going to ramp up in Q4 to support all these launches.
That's right. And just to tie a bow on the whole company health picture, it's not just the financials. So SOBI was just rated the most reputable rare disease company in a survey of over 500 patient groups. That credibility really matters long term.
So the takeaway is, despite the market noise, the fundamental message here is really constructively bullish.
It is. It's all driven by that margin discipline and these huge accelerating pipeline catalysts.
And now for the part of our deep dive where we transition to our This Is Not Financial Advice segment, we're going to pitch an outrageous but plausible trade idea based on everything we just covered.
So the central thesis here is simple. You're capitalizing on the market's overreaction to that non-cash Vonjo charge. That SEK 6.6 billion is a fully absorbed loss. It created a temporary discount that is completely overshadowing the real story.
Which is the accelerating pipeline.
Exactly. The NASP approval path and that incredible olezarsen data. So the trade has to be a leveraged bet on that value being realized in mid-2026.
Time to those pipeline milestones.
Perfectly timed. You initiate a sophisticated directional bet that targets the Q2 2026 earnings report.
Yeah.
That timing captures the run-up to and the actual delivery of the NSP PDUFA date. We'd structure this with options, specifically a long call spread to maximize leverage and define your risk.
Okay, that's the focus part. Now make it outrageous.
The outrageous component is twofold. First, you help fund this position by selling near-term puts. You're wagering the market has fully digested the Vonjo news and the stock has found its floor. Second, you size the trade as if you already know there will be a positive surprise from the Q4 Gamifant sepsis data.
So you're betting on the clinical trial outcome.
You're betting on it. A win there would fundamentally validate their entire R&D engine in immune dysregulation, proving their pipeline is worth far more than the market currently thinks. It's a pure wager on management's ability to execute.
A fascinating thesis. Using a temporary discount to place a levered bet on future catalysts.
It's technical, but it's all anchored in the credible execution story we just unpacked.
So to sum it up, a spectacular operational beat with a near 50% margin, strategic pruning via the Vonjo impairment, and a hugely compelling pipeline led by NASP and olezarsen.
Which leads to the final provocative thought for you to consider. With all this cash generation and disciplined capital allocation, once SOBI gets these big internal launches stabilized, how much of that dry powder will they deploy on M&A? And will they target a completely new vertical, maybe outside their core hematology base, to fuel growth for the next decade?
Something to mull over as you continue your own research. We hope this deep dive has provided the clarity you needed today.